If you live in Indiana, hopefully you've been taking advantage of the very, very lucrative 529 tax credit. Well, guess what? It is increasing starting in 2023. I've got those details coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so 529 plan in Indiana, I'm sorry, it offers the most lucrative tax benefit out there. And guys, I didn't believe it at first when I heard it, but that tax benefit is actually increasing. Now, if you don't live in Indiana, that's okay. So here's how 529 plans work. It's essentially the Roth IRA tax shelter for college accounts, okay? When you make a contribution into your 529 plan, there is no federal tax benefit for that, okay? So there's not like an IRA 401k where you get a deduction on your federal taxes. Money goes into the 529 plan. You can choose how to invest it, and that's interesting right now, certainly because of all the risk that we've seen and uncertainty now that we're potentially in a recession, right? But that growth, all that activity from the investments is tax sheltered, so you don't pay tax on the dividends or interest or any capital gains if you sell investments, whatever, within that 529 plan. And then when you withdraw those dollars, if you use the dollars for qualified higher education, just did a video on this last week about, so tuition, room and board, books, any required type expenses, you got to be aware that it make sure that it's a qualified educational expense. That growth comes out not tax-free, okay? If you don't use the money, if you withdraw that growth for an expense that's anything other than a qualifying higher educational expense or educational expense, since now you can use it for some student loans, for some tuition for kindergarten through 12. Again, reference that previous video for those details. If you don't use it for one of those, not only is that growth taxable, it's also penalized as well. So you're going to want to make sure 529 plan is really for education, okay? Because you didn't get a federal tax benefit on the money that goes in, there's no tax consequence for pulling that basis, your contribution out. It's just the growth, okay? So that's how it works. It's similar to the Roth IRA. No real tax benefit going in at the federal level, grows tax sheltered, and then the growth comes out tax-free. Based on, depending on your overall financial situation, huge benefit. Could be a huge benefit. Now that's how Section 529 of the Internal Revenue Code, okay, it sort of works. That's how it works for 529 plans at the federal level. But each state sort of adopts their own 529 plan, okay? And each state then gets to determine through their own state legislature whether there's going to be a state tax incentive, tax benefit for making a contribution. Many, many states offer a state tax deduction. You put money in, and the amount of money that you put in, maybe up to a limit, is a deduction on your state tax return. But Indiana, some states, by the way, don't offer anything in the way of state tax benefits. Indiana used to be like that, but Indiana actually offers, one of the few states that offers a tax credit. Deductions are good, credits are great. A deduction is a reduction in the amount of income that you have to pay tax on. So it's partially good. It saves you a percentage worth of tax, okay? But a credit is a dollar for dollar reduction in your tax bill, okay? So it's even better. Deductions are good, I'll take it. Credits are great. I want as many of those as possible. Well, Indiana's one of just a few states that offer a tax credit on the amount of your contribution that you make into the Indiana College Choice 529 plan. Now, in order to get the tax credit, you've got to pay Indiana state tax. It's an Indiana state tax credit, so therefore, if you live in Michigan or you live in New York or you live in California, you're not paying Indiana state tax, therefore you shouldn't use Indiana's plan. This is not going to benefit you. But if you live in Indiana and you've got enough income where you're paying Indiana state tax, this is a huge deal. It's a dollar for dollar reduction of that, okay? How the tax credit has worked is it's a 20% state tax credit on the first $5,000 that you contribute. So 20% on $5,000, that's $1,000 of tax benefit that you can get just by contributing $4,000. Said differently, it actually costs you $4,000 to put $5,000, set $5,000 aside for college. You can do this each and every year. This is per tax return, not per person. So if you have multiple kids, you can't do $5,000 for each of them. Well, you could, but your tax credit is going to max out on the first $5,000 that you contribute, so $1,000. All right, Hoosiers, Indiana residents, check this out. This is hot off the presses. I didn't first believe it when I heard it. I had to go to the source and see. College Choice is the provider of the Indiana 529 plan, and check out the change starting 1/1 of 2023. Contributions by Indiana taxpayers made on or after January 1, 2023 will qualify for the 20% tax credit with a new maximum of up to $1,500 per year, $750 for married filing separately. The good just got better. Or the great just got better. This has been, Indiana's not the best at a lot of things, but it's had the very best state tax credit for 529 plans, and it just got even better. This means the contribution, or the tax credit is still 20%, but it's 20% of a higher number. Instead of 20% of the first $5,000, it's now 20% of up to $7,500 that you contribute. So how does this apply to you? Well, if you live in Indiana and you've been benefiting from this tax incentive, then make sure you work with your certified financial planner and see whether it makes sense for your overall financial plan to increase your contributions starting next year from $5,000 up to $7,500. For me, I already made that adjustment. I've got 3 kiddos. We've been doing, my wife and I, we've got a clear college goals, how we want to help the kiddos. And part of that has been funding the 529 plan and certainly getting at least $5,000 into that account. I automatically just went in there. We fund it every single month. I automatically changed it so that the automatic amount that's going in starting in January 1 of 2023 will be such that the $7,500 gets in there so that we get the full tax credit. So if you live in Indiana, talk to your certified financial planner, see if it makes sense for you to increase the amount that you're contributing starting in 2023 up to that $7,500 number so that you get the full tax credit. For some of you, it may not. For some of you, it may not, but for most of you, my guess is you're going to want to take that contribution amount up from $5,000 up to $7,500. For those of you that don't live in Indiana, take this as an encouragement, a prompting, a nudge for you to figure out what your state tax benefit is for 529 plans and see if you should be taking advantage of it. In Michigan, it's a tax deduction on the first $10,000 that you contribute, but it's a net $10,000 that you contribute. So if you've got kids in college, if you've got you want to set $10,000 aside because you've got a child in college right now, and then you pull that $10,000 right out. I know you might say, well, why would I do that? In Michigan, it's you put $10,000 in, you took $10,000 out, so a net contribution for that year of $0. Therefore, there's no deduction. The state tax deduction on $0 is $0, okay? In Indiana, it's just on the amount you contribute. So you can contribute money and then pull money right back out, and you still get the tax credit because you contributed to the account. Other states have that set up as well. We serve folks in just about every state here in the U.S. Each state is going to have their own choice, like their own tax incentives. Some of them offer a tax incentive. Most of them do, by the way. And of those, the vast majority offer deduction. Some don't. Work with your certified financial planner. Number one, see if it's a goal of yours to fund, to help kids or grandkids with college. Number two, if you do you want to set money? Should you be using a 529 plan, I guess is the second question. And you might say, well, obviously you should. Well, depends. Do you really want to set dollars aside that really have the sole purpose for education? Maybe, and most people, the answer is yes, but you've got to ask that question. And then third, for your state, is there a state tax benefit for using your state's plan? And if so, how much should you be funding to get the most tax credit or most tax benefit as possible? Work with your certified financial planner. I see it all the time where investment advisors don't recommend your state's plan because they're just not aware of these tax benefits. Make sure you're working with a certified financial planner. Why? Because they want to help you achieve your goals. And one of those goals is to pay the least amount of tax over your lifetime while you're achieving those big financial goals, helping kids with college, being on track for retirement, all those sorts of things. So work with your CFP. Make sure that CFP is doing comprehensive financial planning. If you don't have someone like that on your team, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with the K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.